Good evening, folks. This is Srini from Techie Investor. Today, I wanted to talk a little bit about how my dollar value can affect investments in my portfolio in 2024. Why I'm making this topic? Recently, I got a question from a lot of subscribers asking, what should I invest in? What are the picks that we should think about investing? So to get to this concept, we need to understand how the dollar affects the economy and in fact also affects the three major asset classes that we invest in, which are the stocks, commodities, and bonds. Okay. Recently, Fed on September 17, the Fed announced the rate cuts of 50 basis points. And what happened because of that? Anytime the Fed announces the rate cuts, what is going to happen is there is a lot of supply of the dollar because as the rate cuts increase, as the rate cuts happen, there'll be a lot more money available for the companies to invest in and also for the consumers. So when that happens, what happens? The demand decreases, right? As the supply increases, the demand decreases. And then what happens? The dollar weakens. So now let's consider what happens when the dollar weakens to the stocks. Now there are two kinds of stocks. One is the international stocks and the other one is the domestic stocks. So let's talk about international stocks. So when the dollar is weakening, the international stocks tend to rise. Why? Because the value they provide in their currency would be greater than it was previously. I'm not saying that it is going to drastically increase, but since the dollar decreases, the other currency tends to increase. So that way, what happens is these stocks tend to rise. Okay. Now the international stocks is the best way to invest now when the dollar is weakening. Other thing, let's consider the domestic stock. When the dollar is usually strong and is like increasing in strength, what happens is the exports becomes more expensive for the other countries. So which is not good for the international consumers of our services and products, right? So what happens is since that when the dollar weakens, what happens is these exports are much more affordable for the international customers. So either way, the companies tend to rise. The multinational companies who provide the services and products to different continents apart from US, like Europe, Asia Pacific, tend to rise, right? So that is what is happening. When the Fed cut the rates, what happened is all the small caps who were providing the services to the international communities started rising. That's why we see IWM and IWR are becoming the main picks by most of the analysts like Tom Lee. They suggest to invest more in IWM and IJR, which is the top 600 of the small caps, right? Now let's talk about the second asset class, which is the bonds. When the dollar is strong, these bonds tend to give you more yield. That means you can get more return for your investment. Why? Because as the dollar is strong, a lot of investors flock to the dollar and invest in them to get those yields, right? Now, what happens if the dollar is, but again, you have to understand when the dollar is strong, that means your buying power is also increasing. Though the yields may increase, but the value of the bonds may decrease. So that's a two pro and a cons to it. But it all depends upon how strong the dollar is and those kind of things. Of course, when the dollar is weakening, then people flock to other currencies to invest. So that means we will be losing the value. We'll be not getting that much yields from the dollar, right? So that means the yields will go down when the dollar is weakening. So that is about the bonds. Now the third asset class is the commodities. Commodities, how does it work? In particular, let's talk about gold. Whenever the dollar is strong, the gold tends to go down. And whenever the dollar is weak, that gold tends to go up. So since the Fed cut the rate, the dollar has been rising more. And also gold is considered as an inflation hedge. So either way, it's always a good place to invest some percentage of your portfolio to keep that hedge against the dollar, right? Similarly, all the other commodities also are inversely proportional. This is in the more of the macroeconomic scale. Again, a lot of factors include like how much of the commodities are available, those kind of things. But again, not considering all the other factors are the same, just considering the dollar value, Like if the dollar value is dollar getting strong, then these commodities decrease in price. And if the dollar is weakening, then the commodities tend to go up. So that's the general term. So now we talked about the three asset classes, right? That means you know how to invest smartly when the dollar is strengthening or when the dollar is weakening. As simple as that, folks. So right now, as the Fed cut the rates and with more interest rates cut coming, we can see a lot of these small cap stocks which were like suppressed for the most of the year. They tend to go up, and we might see the money moving away from the bonds because people don't want to because the yields might be decreasing. And also we might also not see the commodities going up, right? Because people want to invest in high risk, more riskier investments like the stocks, especially the growth stocks, right? It's small cap and even mid cap and the small cap stock. So hope this information is valuable to you for your trading decisions. Definitely, I would love to hear your comments and feedback about how the dollar value is affecting your investments. Okay. And definitely do look up other videos that we have discussing the different marketing trends and trading strategies and risk investments. These are the kind of things that we always discuss in our channel. And before you go, do subscribe to our channel and hit the bell button to receive these kind of updates in a timely fashion. I'll catch you in the next one.